What's up, guys? It's February 20th, 2024. Had a kind of a selling. We had two legs down and then went range bound. If you guys are wondering where yesterday's video went, I accidentally posted two videos on Friday. It was supposed to be one video on Friday, one video yesterday. So that's where it went. So we're still on track. It's just I posted on the wrong days. Pretty good day. We're going to go over the first 6 bars of the day, leg 1, leg 2s, and the market structure. These are the things I wish I kind of knew right when I started trading, and they're really helping me in trading, so I'm just going to keep going over them every single day, and hopefully we can all get super profitable together. So we have a gap down. I'm going to try and draw on it. Gap down with no continuation here. Bar 1, no continuation for the bears, that's bad. However, bar 2 is pretty strong, and this is last week's range. This blue line is 50% of last week's range, so we're breaking below last week's range. We have a gap down. We're below the EMA. I'm definitely more bearish than bullish. I wasn't trading this. I got caught like right here, but so bears get their 2-bar reversal, pretty strong reversal. They break out and they go for a few legs down. The first 6 bars of the day stop right here. We have one bull bar, really strong bear legs, and then small range bars. So the dominant feature within these 6 bars to me are these 2 bear legs, 2 bear bars, and then bears get a few legs down. They get 3 legs down, 1, 2, 3. It's a wedge bottom, spike and channel, creates a wedge bottom for the bulls, and then bulls get it by the close rally into the EMA. This is pretty strong. There's a lot of overlap, but they're also buying against the selling. So here's the double bottom for the bulls. Someone asked me what a wedge bottom is. A wedge bottom bull flag or bear flag. And here is an example of a wedge bottom. So bears get a spike and then we channel, making leg 1, 2, or 3. Or it can be like 1, 2, and 3 double bottom. There's multiple ways to look at it, but the important thing is to see that there's 3 pushes down. So that's 3 failed breakouts. Bears fail to break out 1, 2, and 3. Bears get short here, they get trapped. They get short here, they go down to the original entry and they make money on a scalp, and they hit out, they buy back their shorts. Bulls buy the lows and they go for a leg into the EMA. I thought this leg was strong enough for a leg 2 move. I got trapped around here, but I reversed quickly because we're still trading below the EMA. Control over time. Bears are short, and they get another leg 2 move from a leg 1, leg 2 perspective. They sell here. Around the middle of the day, we see a strong reversal bar. This is almost a 2-bar reversal. Not the best 2-bar reversal. It would be better if the bulls closed above bar 38. But this also creates a wedge top bull flag with 3 pushes up. One. It's kind of bad looking. 1, 2, 3, or we can go 1, pull back 2, pull back 3. That one's better. Wedge top, and it sells to the downside for 2 legs. Leg 1, leg 2. These are micro legs. I don't know if you guys can hear the rain. It's pouring out here. And then there's a broad bull channel for the rest of the day. You can make money buying lows and scalping out, or shorting highs. I think it's better to sit out. I made decent money here and here, and I got chopped up here. Kind of sucks. I gave back on my gains and lost like an extra 70 something. So I got trapped right here, thinking we were gonna sell to the lows, and I kind of sized up. So that sucks, but it is what it is. Go over the leg 2 moves. Gap down, pull back, leg 1. That was bad. Hold on. Here, leg 1, leg 2. It's pretty big. Let me go body to body. Still not meant you have to sit there with deep pullback, so you could get trapped in there. But look at the wedge bottom. So if we see the wedge bottom with the double bottom and these 2 bars, I think it's good to get out. I got out as this bar was turning back down because this bar had some energy, and then the bulls started getting by the close rally. That pullback on bar 15 is a pullback on a lower time frame, so maybe if you were going for a scalp, you could do something like that. I didn't take that. I'm trying to just do like longs above the EMA, shorts below, but I wanted to front run if there was a good breakout back to the highs or something. I hit out on this bar, something like that. Here's the lower high double top, and they get a leg 1, leg 2, and this is strong enough, it looks like, for its own leg down. So here to here, pull back, However, it fails, and that's also 3 legs, and that's another type of wedge bottom. So 1, 2, and 3. 3 failed breakouts to build a bullish breakout. 3 failed breakouts for the bears, and then bulls get a reversal bar and start to trend the opposite way. Where are we? So there's leg 1, leg 2s. In range days, a lot of leg 1, leg 2 fails, so I think it's good to scalp out. It's probably better to scalp out on range days. It's really hard to do like countering this because it's a tight channel, so I think it'd be better to draw channels and then where? Parallel oh, I see. So that would be kind of the channel. Or it could be like this because there's more resistance. We popped out, failed breakout, vacuum to the bottom of the channel, and then we went back to the top of the channel. So yeah, there were a lot of the leg two moves were a little bit harder towards the end of the day. I think the easier trading was at the beginning of the day, which is where I pretty much made money here and then gave it all back here. So that sucks. I gave it all back and then some. And then okay, so market cycle. Here we are in the market cycle. Breakout and trend. The market cycle resets with a breakout, then it goes channel and then range. So we have the breakout, and then first pullback creates a channel, and then the market ranges. The market's always in transition, so as the trend is ending, the channel is already starting. As the channel is ending, the range already started. So now we're waiting for a breakout again to see where we go with the market cycle. Maybe bears want to tag the higher time frame EMA. Here we are on the daily. This is the daily chart on the left. Bulls bounced off the trend line off the higher time frame EMA. Here we are on the 45-minute. They're trading right below it. We did close below it on that. You guys see right here on the daily. That's this right here. Lower high, triangle. There's support below, resistance up top now. Let's see. If I was to draw this, what would happen? I don't want to draw too many higher time frame lines, but I'm going to leave that one there just to see. We are in breakout mode, kind of. Market's contracting. So we'll see what happens if we sell from here or if we go back into this range. I appreciate all the support. I like all the comments you guys are dropping. Keep asking questions. I'll keep trying my best to answer them. I'm trying to keep these videos around 10 to 15 minutes. We're going to talk about first 6 bars of the day. I think I didn't really... The first 6 bars of the day are more bearish, and we have more bearish price action. 1 bull bar, and we have a small pullback, and then it was easier to make money going short. This is a tough channel. So we're going to talk about the first 6 bars of the day, second legs, and then where we are on the market cycle. Depending where we are on the market cycle is how we trade the legs. Hope you guys are studying. Keep using your stop loss. I'll talk to you guys tomorrow. Bye. Thank you for all the support.